presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and we're looking at something very interesting here, right at the border. You see this? This is the daily chart on the left side. Now, I do the Tiger Technicians Hour at 10 o'clock to 11 o'clock every market day, and my service here is the Opening Call Daily Newsletter. So we've been long the Dow for a long time. Actually, you can see I've been long since 2022. Still have a core position. Been long since 2020. Still have a position there, and we have trading positions within that in the Dow. At this particular point, we're still in the long side, but I'm looking at this and I'm saying I'm quite prepared to go to the short side as a trade, just a short-term trade. If this repellent line, you see these two lines here, it's like a little kind of a tiny channel. I call this a falling axe formation, where you get lower highs and much lower lows, and all of a sudden there's some support, and it tries to make a cup formation to take out this trend line. Well, if it takes that trend line out in the next 2 days, it gets to the 44, preferably 44,700 or higher area, that's a nice break to the upside, and that would suggest that we have enough strength to try to tackle the high of 44,855 on the 3rd of July. We'll see what happens, but certainly today's low, which is at 44,272 in the Dow, that has to hold any pullback in the next 2 days. But look at the weekly chart, like a triple top here at the 45 to 44,800 level. Just hasn't been able to break, but nothing here is technically weak. The stochastic is flat. This is the green and red lines, 95%. I do a lot of this work. I show my subscribers some Opening Call, all these different techniques. I have webinars on them. And this 9-period moving average that's over the 14, that is a fantastic technical tool. And it's great in the daily. It's terrific in the weekly. And the monthly even is absolutely superb. So to really, you have to have, could it be Powell? Could it be interest rates? Well, if you're talking about interest rates, look, the TLT, all of a sudden, the TLT is having a nice move to the upside. So the TBT, which really is the interest rate, that's the bonds on the one side. Here's the interest rate pulling back. That's really important. It's helping Toll Brothers. Look at that, Toll up 9 now. It was up 5 before. Now it's up almost $10. And that's going to be very important because this is now in a leg D in the weekly chart, and a breakout to the upside here in the daily. Could this be a brand new leg B? You see, this is the whole thing. We're looking at a market that says between Robinhood, which I use kind of as an indicator, well, we still have a position that's still from the 16s. It's at 102, hit 113 the other day. But most importantly, it's kind of been a benchmark for us to say, this is the general public coming into the market, besides which they also play Bitcoin, and Bitcoin right now is up 3,305 at 120,125. So that's kind of positive. So you've got these different sectors, but General Electric, which is a cyclical area, the airlines, the air, the whole, even defense, is just in everything that has potential. This is really deep cyclical. Is pulled back from the all-time high of 272.80 from the other day. Nothing, it's not a big deal. Look, the weekly chart is still good. But that's the rotation that we look at. And we're along General Electric from way down the 190s. It's trading at 259 right now. And Microsoft at 505.92, down 4 after a little peak D. Remember the Chapman, we were always looking for those Ds? Well, it's done it 3 times now and then had another move to the upside. So this is going to be important in the sense that if you start to get these really strong winners in this part of 2025 start to falter, then you look for what's working. Well, Caterpillar is is doing very nicely, almost at an all-time high. That's a deep cyclical. That's really important. And as I said, you've got let me do the HGX. This is the dollar HGX. This is the home builders. Why is it not coming up? HGX.X. Okay, I don't know. I don't know why that's not working here. There it is. Look, breaking out to a nice recovery high. The monthly chart looks horrible since it went from 837 down to 550. But here it is at 692 legs, seen the weekly chart, improving in the week. So you see, this is what I'm talking about. That this has been a market that has been built for some time now on this rotational aspect, that as one sector that's done extremely well takes a bit of a breather, you've got another sector that's taking its place. And that's really the key. And that's why I'm saying the end of this month, but especially end of this week by Friday, we're going to see whether or not we do get some kind of a pullback or whether it is rotational, so that the actual, in the balance of the market, you still got some movement to the upside. Now, let me just continue. I wanted to show you something here. So the small caps, the IWM, nice move up $2 at 223.50. But that weekly chart needs a lot of room. It looks good, but it needs a lot more. So in the rotation, if there is in the next 2-3 weeks, let's just say it is Powell. I don't know what's going to happen, but let's just imagine something like that. Well, the market get a little nervous, but at the same time, it'll suggest the market might say, now we're going to get low rates. You know, it's a mixed blessing, lower rates right now, because if there is demand in the general market, you want to see money coming in to buy mortgages, to buy bonds, to buy anything that has to do with interest rates. They want to take loans out, and that's good for the economy. So I'm not sure even lowering it I don't know what it'll do to the market at this particular point. So with that said, I do want to go to the XLK, which is XLK, which is this is the S&P Select Tech Spider Fund, all-time high yesterday, a little bit down today, down 230 at 258.92. But you can see this is just a massive leg B. In the Chapman wave methodology, we're always looking for Ds to say, now you got to be careful. This is only a B. This is really positive. A weekly chart, I can't even go into the monthly because that could actually be a brand new A for 2025. Unbelievable if that's the case. Now, what I just wanted to mention here is PPA. That is the this is the Invesco Aerospace and Defense Fund, all-time high 3 days ago in the 147 area, a little bit down today at 143. And here we've got kind of a mixed market. Look, we've got Raytheon. Did Raytheon come out with earnings? Down $1.60. At this point, it is at 149.96, made 153.39, all-time high yesterday. Today it had a round number. Oh, what happened to the round number? Oh, right now it's at 150, round number. Interesting. Okay, well, look at that. It went all the way down to 143. Now it's at 150. Buying just keeps coming in. It's a very interesting market, this. So you've got to think of it as a rotational market, and the different sectors we're going to look at. Look at this, high-grade copper. High-grade copper, where did it go? High-grade copper was coming back nicely. I'll be right back. Basil Chapman sitting for Tommy O'Brien. This is the Tom O'Brien Show. Yep, high-grade copper is at 573. Oh, very nice. Good action. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks. So this is usually the time that Tommy would be interviewing me for my newsletter, the opening call newsletter. I just want to do this quickly. I had a question about Rockets Company, RKT. It's at 16.02. It's up 98 cents. This is a very nice up spike from the 200-period moving average. And what I had said is, this is a person who likes longer-term positions, doesn't want to go in and out. I said, just get your foot in the door here. Even with this big spike, must be earnings or something like that today. It's at... it's up 6.25%. And I said, right here in the 15.98, just get your foot in the door, but I wouldn't get too carried away, because you need some kind of a pullback between for somewhere between 15.20 and 14.90 to feel a little more comfortable. But this is a leg. D&D's where other things can happen in the weekly chart. But this could be a brand new move to the upside in the daily chart. But it's in the area. There's several organizations with similar sounding names, but this is Rocket Companies, I believe, and it's a Detroit-based fintech company specializing facilitating home ownership and financial management. In this particular instance, especially since I'm looking at Home Depot doing so nicely. Look at this. Home Depot has a very nice move today, up 5.84 at 369.88, stuck at the 200-period moving average, where it wasn't looking too good 2 days ago, but now it's improving. And that's just saying to me, yeah, maybe this whole thing with the lower interest rates, they can benefit. So yes, get foot in the door. So Tommy said, hi, how you doing? What are we looking at? What we're looking at is we're looking at the Dow. Right now the Dow is up 165. Right at the door of this is, if it's able to break to the upside, there's a particular technique that I use. I have webinars on this. I'll just show you right here. This is called the falling axe formation. And what happens is, there it is. So what happens is you see a price and it goes to usually a D, E, or F from the upside in the peaks, but then it starts to pull back. And you see a lower high and a much lower low, two trend lines, like a cone formation, expanding. I call it the falling axe because it just looks like an axe. But then all of a sudden it finds some support. And if it takes out this upper declining trend line, this cone formation, then all of a sudden you could look at all the left side peaks on the previous ones, because that becomes the target for each next move up. That's what I'm saying, that if this can get to 44,600s tomorrow, I prefer 200 points high at 44,680s. That's going to be important, because you can start tackling each one until you get to the 44,855. The all-time high was 45,073, and that was early in the beginning of the year. So we're waiting for the Dow and the IWM are the two lagging indexes. The others are doing very well. So this is very important. So we are still long. We haven't done any shorting on this at all. Now, one of the things that I'm looking at is our out of our portfolio, I call it a portfolio, out of the positions we have, about 4 or 5 of them are at or almost at all-time highs. So I don't really want to add at this particular point. And we've been, over the last 2-3 weeks, I've been looking at lower cap stocks. So we have something like a BBAI. We got it at 509. It spiked. This is Big Bear Holdings, AI Technology, spiked up to the 872 level, then pulled back. And now it's, so, from 5 to 8, we had very nice profits. Now we've taken a third off plus a tad here and a tad there. But it's looking quite good. The weekly chart is starting to improve. It needs to get to the 820 area in the next, that's a whole point higher. If it can do that, it'll tackle the previous high. Another one that we have, when we've got these stocks in the 3 digits and double digits, I like to go to the single digits because they give you a nice bang for the buck, but you're not putting as much money to work at this particular time when things are a little shaky. So CDE bought it in the just under. Where is it? Right here, just in the low 7s, and now we're looking at 959. It's done very nicely. This is core mining. Look, the silver stocks. The silver is doing very well. Look on the right side, the new yearly high. Leg C in the weekly chart, we always expected D, and this is still only a C. Here's your D in the daily. We also have a TGB, which is Taseko Mines. Taseko Mines, I like the copper, but I wanted a very low price copper instead of going for the very high price. I wanted to get a low price because I wanted to put less money to work, preferably with a nice gain. So here it is. We bought it at 3. It hit 368 very quickly. We've taken a little bit off, but we still have our core position, and it's now at 343. And what I said earlier in the day, when they were asked by in the den, Tiger's Den, what am I thinking of copper? What am I thinking of TGB? I said it needs to get to the 348 area quite quickly, and that'll be very important. And high-grade copper, and it's at this particular phase in the market, you want to see copper acting well. It's in the world economy, this is always an important aspect. They used to call it Dr. Copper. So I said it was down to 570, I think earlier, 570, 571. I said it needs 573, and here it is at 573 to fill this rectangle so it can go into this long wick. If at any point high-grade copper can hold for about 4 or 5 hours above 5.82, it'll probably tackle the high that was made on the 8th of July at 589. As far as gold is concerned, we still have our PHYS, our physical gold, from 20. It's at 26 right now. This is going to be important because at 26.43, 1 penny above the previous high, you've made this cup formation and you've broken out so that the weekly chart can say, hey, I've gone to a new ladder. That's important. And the monthly chart starts to extend even higher. That's the Sprott physical gold units. So we're in different areas. We're in the Bitcoin. We're still in our Bitcoin, IBIT. That's the iShares of Bitcoin from much lower down. I think it was in the, just at this particular point, this is very important because it's in the rectangle formation, the Bitcoin itself, but even more significant than that, you want to see Bitcoin trying to get close to the all-time high. That'll be very important in this particular phase. So as far as the IBIT is concerned, we're along from the 38s, and it's trading to IBIT, trading right now at 67.97, and this, I've got this in the daily chart only as a peak C, but there's a discrepancy because in the Bitcoin futures, it's already at a peak D, and in this rectangle digestion, remember we're looking at the high-grade copper, this digestive phase. Once it breaks out and gets into the wick, that's very important of this. This is an inverted Chapman wave Roman candle. So I just thought I'd go through a couple of things. I'm sure I'm missing some. Oh, Microsoft, we're still long Microsoft. From the 338 area, we have some position there. It's at 505, had an all-time high yesterday. Robinhood, as I say, we're in starter position at 16. We had one really nice trade, got taken out where we had a long, and what I wanted was an intermediate term and a short term. It was somewhere in the 48s, I think it was. Whoosh, it got taken out. And now Robinhood is up at, it hit 113.44 just 3 sessions ago with a doji candle. So this is what's making me just a little nervous. But I think if we've got the rotation here, and General Electric fits in that category, because we are still long the General Electric from the 190s, and here it is at 260. If they take a bit of a breather and out of the blue, instead of you have a unified pullback, instead you get this rotational pullback, and Caterpillar can still continue to even higher highs. That'll be really important. So that's what I'm saying. In this particular aspect, where it starts to look like, be careful here, all of a sudden, because of this aspect that started in 2011, after the 2009 low, you had that summer where we learned that rotational action can save the day for the next big move up. If that's the case, yeah, it'll be really positive. We'll be back with Tim Ward straight after this. Basil Chapman sitting for Tommy O'Brien. Dow is up 167. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Everyone, we're back, and the Dow is up 161. S&P is only up 5.91, and we have Tim Ward on the line. Tim, how are you?
Good. Thanks for having me on.
Pleasure.
So, we want to look at the markets here?
No, nope, not at all. First, I want you to tell us and tell the listeners exactly how they can reach you.
Okay, it would be, my website is ord-oracle.com. I do have a Twitter, or an X, I guess you might say, Oracle. If you do @Oracle, you'll get to that Twitter account. Other than that, Tim, or my email is tim@ord-oracle.com. So those are the places you can get me. Or you can just Google me on... You just Google Tim Ward, too, I'll get you there. So
I'm sure it will. Folks, Tim's going to now give us his charts. We're looking at the daily equity put-call ratio, the S&P.
Yep. This is actually, I wanted to ask the audience, too, if they have an interest in something, you can, email me or email TFNN if you want to cover a certain I don't know, equity or index something, we'll take a look at it. But what we're going to cover today is the equity put call ratio readings, and it's kind of rare. This chart goes back to looks like about 2023, and it's a daily chart. SPX on the top window. The bottom window is a 21-day average of the CBOE equity put-call ratio reading. Next one up is a 10-day. The next one up is a 5-day. So you got a 5, 10, and a 21-day moving average of the equity of the CBOE equity put-call ratio readings. What I found when all three of those, which right now are all three of them are actually in bearish territory, you at least get sometimes you get a decent top. Sometimes they're smaller tops, but almost always you get at least this. This big one here was that top back in this year. It started in basically December, lasted until February. The market kind of just traded sideways, and all three of the equity put-call ratio reading averages were all in bearish territory. So that was another reason I suspected the pullback was coming. We had another small one here. Looks like this was May, lasted looks like probably maybe a week, and now we got kind of the same thing going on here. We got three of the moving averages. This is a sentiment indicator, so it in other words, the public is too bullish on the market right now, and when you get to 21-day average, which is basically a month of equity put-call ratio readings in bearish territory, you got to really kind of look out. And so we're in that range right now. So even though we're kind of staying steady here to the upside, the sentiment-wise is bearish. We'll look at another one here. Here's the bottom window is the VIX. I do quite a bit of work with the VIX. Or actually, this is the bottom window is the SPX-VIX ratio, which flips the VIX upside down. So it's just a little bit easier to read. So, but when you got the S&Ps making higher highs, which it has over the last week and a half, you got the equity, or you got the SPX VIX ratio making lower highs, and that's that can go on for a while. Back in the top of actually earlier this year, we kind of had the same thing. The equity market was kind of pushing higher, and that ratio is pushing lower. We have the same thing on a little bit shorter term scale, but I think we're at the tops right now. Will the market start to decline? Today, not necessarily. Sometimes the tops take a little bit longer. So we're kind of looking for a trigger to actually go short, but it's not a big short. We'll do one other indicator here. The bottom window is the SPX. This is the daily. The next one up is
so this is chart number 3, right?
Yeah, just chart number 3.
Good. Okay.
Am I running the charts?
SPX/TLT, right, as well. Right.
Yeah.
Got it.
All right. Am I running the charts, or are you?
No. Al's running the charts, but I just wanted to check that we're looking at the right chart. That's good.
Okay, all right. And the next window up is SPX tilt ratio. So that's the equity market against the bond market. And normally when you move too far in one direction on this ratio, SPX to tilt ratio, either you get a bottom or you get a top. So I put an RSI with it. And a lot of times, right here, you got the RSI way below 30. That picked out, that shows where that went. So that picked out that low right there. And you had an RSI again on the downside, which picked out that low. So picked out this low right here is the minor low. Picked out the major low of April, which is down here. So now you got some tops going on. You got the RSI, way up above 70 here, and you had it. This is last. I think it was last. Did I write it down? No, I didn't. I think it was last Thursday. The RSI got up above 70, and now it's turned down. If you can see it right here, this ratio is starting to turn down, even though the equity market is still holding up here. This SPX tilt ratio kind of leads the way. So this is another chart. So how deep are we going to the downside? Not much. So this is the monthly SPY, the SPY on a monthly chart. And if you notice back in here, and this is February, that was the high. We tested that February high on about half the volume. Or actually, no, this is a February high, and now we closed above the February high, so it's a breakout to the upside. Volume was about double what it was in February, so it's a valid breakout to the upside. So the previous high now becomes support. So when the support comes in, this is probably around 610 area, 60. It depends how you draw your trend line, but it's around the 610 area, so it's not a big decline. So even though we're hitting a high in the S&Ps here, probably volume chart, we got about another week and a day or so of trading for the month's end. I doubt this volume will be higher than that. So we're kind of breaking above this high. This month's high is breaking above the previous high on a little bit lighter volume, so that says upside energy is kind of weakening here. But we're not going to go down far. 610 area, 608, they'll try to scare you. But probably what we're going to do is build a sideways market. Oop, I hear the music.
Okay, yep, there's the music. So, folks, the Dow's up 188. S&P's up just about 10 points right now. We're on with Tim Ord. We're discussing the charts and just how he's looking at the market and what technical tools he uses. Just fabulous information. And we'll be right back. Basil Chapman sitting in for Tommy O'Brien in the Tom O'Brien Show. See you in a few moments.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. And, of course, this is Tuesday, and we've got Tim Ord Oracle himself right here. Tim, you're on the what chart would you like to look at next?
All right, we're still on this this
the monthly SPY VIX.
Yeah, SPY.
Good.
And by the whole point of this thing, we're at some sort of a short-term high here, but the high is not real. It's going to flip sideways. I got a bigger target up around 740, but between now and probably, I think we'll trade sideways for October before this thing takes off to the upside again. So if we're trading, you're only looking at 3%, 4%, maybe to the downside at best, and so it's going to be a dull trading period more or less over the next couple of months is my view. So that's that. Let's go to the gold market. Even though I've got quite a few calls actually over the last couple of days. Everybody's thinking we're going to go much higher, and don't think so. This is the June close on the monthly chart. The RSI hit 7130, and I marked all the times that previously that has happened going back to 1988, and even this one kind of just stalled the rally. It did go up a little bit more, but in general, we're probably going to just trade sideways here. I think there's a good chance we're going to pull back down to 575, which is basically the previous highs, before we go back up. But the monthly chart suggests we're going to stall in here. This is the RSI on the XAU, and it has a pretty good high probability. And here's another chart. I think, June. This is a daily. Yeah, this is a daily chart. On June 5th, a little over a month ago, we had the RSI hit 96, or we had the bullish percent index, I should read bullish percent index, hit 96.43. Anything above 95 has stalled the market also. And this chart goes back to 2006, and I marked those up here. And so that's another reason. Totally a different indicator, has nothing to do with the RSI, and it's saying the same thing. And I got, there was another chart too, I didn't put it in, but we should stall around here on GDX and the XAU. That doesn't mean gold stocks won't keep going up. The big ones will probably consolidate because the XAU RSI hit there and GDX RSI hit there, and probably the big gold stocks will consolidate. But on a bigger time frame, if you look at the this chart goes back to 2000. This is gold, monthly gold, and gold has an 8-year cycle, actually a 16-year cycle and an 8-year cycle. And we're kind of extended up here. Here's, if you notice this RSI up here, way up well, we've been way up there on gold too.
Yes.
So gold may consolidate. We had a heck of an impulse wave to the upside. What I want to point out is the eight-year cycle bottom in late 2023, pretty much right on target where it should. And so where's the next high go? Where the high goes, there's a 4-year cycle low, and there's a 4-year cycle high. And I marked this period right here where a bigger consolidation may happen to the upside. And I think what's going to happen, we may consolidate a little bit here, but the next important high is probably mid 2027. So
great.
It's a long ways off. Actually, I even think it could be something bigger than that, because I think what we're happening here, we're in a big 12-year cycle. This market rallied for 12 years to the upside, and I think we're in a similar cycle here. So even though we'll see some multi-month corrections like some of these right here, I think we may have a multi-month, which are bullish. You got to have an impulse wave, then you got to have a corrective wave to build energy for the next rally. But August 2027 has an area, which is this line right here, and previous times, which is this line here, have marked, pretty much significant highs. So I'm thinking we're going to go to that time frame. And that time frame is nothing to worry about short term, but that's an area I'll be watching as we approach it. So we'll see how that works out. But we're in a major bull market. There's no top of any consequence other than we got a timeout here in an uptrend that may see a pullback on GDX. We think possibly around 40 range, which is decent. Sim is pretty high on the gold issues right now, so we're due for a consolidation. But a lot of these smaller stocks, which I got a lot of, are really starting to break out to the upside. So we'll see how it goes. Actually, we got 3 minutes here. You got something we can talk about, or do we have?
Well, I just wanted to mention, just for the audience, because this is fantastic information that you've given us. Back in September of 2011, the GDX hit. This is the gold miners index, hit 66.98 before plunging down to 1240 in 2016. Then went sideways, retested at 16.18, and then had this huge move up. So yes, and the XAU. You were talking about the XAU, and that's also very interesting because the XAU had a high, I believe, I'm just going to go to it right now, XAU.X, there it is. And that was also much higher. So when you're talking about these instruments, it's fantastic. This was December of 2010, hit 232.72 before going down to, I think, the 40s or something. And here it is. So this is fabulous information. And yes, I know that folks in the den and on YouTube, Tiger folks have been mentioning some of the stocks that you've had. Very low price stocks have done fabulously. So I advise everyone, take an opportunity, go to the Oracle, check out these news. I believe you put your results on the newsletter as well every year. So that's great.
I do. So, but here's the XU. I keep talking about this 2000 low here. I think we're in a similar period, and I think we're going to move up something similar to this. And I think, even though this 2016 low, I don't know. I think the part of the big rallies really have started on. If you do the analysis on a monthly chart, the really big rally started in 2023. I think this is the time that. Well, we'll see, but this rally's not over. I'll put it that way. I'll have indicators that start flashing on the monthly time frames that this rally is getting late in the stage, and at the moment we're not even near that. So. It could be still a fun ride, but the next couple of months may not, because we may consolidate. So we'll see how that works out.
It's interesting in this time frame that we've got gold and silver, just these metals doing so well, because you would think that it would indicate some kind of inflationary, something like that, but it seems to be something completely separate, as if they've built up their own orbit, their own momentum independently of the market. Would you say? Yeah.
Actually, I think that the equity, the gold stock to gold ratio is so low that it's starting to correct to the upside. So that's what I'm thinking. This ratio got way out of whack.
Very good point. Yes.
So,
Tim, thank you very much. Always fascinating, always terrific information for the listeners to TFNN. We appreciate it a lot. Have a great, what is it, today, Tuesday? Have a great time. We'll see you on Thursday again.
All right, we'll see you at 30s. Thanks a lot.
Thank you very much. Folks, the Dow's up 108.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and I just had all my stuff suddenly shut down. So let me just tell you that the Dow right now is up 185. Maybe right now it's a little different, but it was up 185 at 44,506. It needs to break 44,680 to really start to break above trendline resistance. If it can do that, that's very good. The S&P's up 7 at 63.13. And yesterday went all-time high. Right now what you're looking at is the Investors Business Daily. It says stock market exposure 80 to 100%. They've had this for a little while. It says down near days highs. Tesla does make this move. So this is going to be very important. You've got a bunch of stocks. I wanted to go through here. I can't do it right now. CLS, Celestica, TSSI, TSS Core, some others. But in the meantime, I also wanted to say that, let me just lean across here, and I can see that the QQQ is down about $2. That's the NDX 100. So we've got the thing that I'm worried about most right at this particular point is that leaders lately that have made all-time highs have the last couple of days stalled, like General Electric goes to an all-time high, and now it's just it's underneath that high. Robinhood has done the same thing, hit 113 the other day, and now it's pulled back. It's at 102. And Microsoft did an all-time high. Now it's a little bit low at 505. They're not breaking down, but they've been leaders in this. They're telling me there might be a rotational correction coming up. And if that's the case, what we really have to find out is what's taking this place. And what we were looking at a little earlier before we had Tim Ord on was that Caterpillar was doing very well. So there's a little rotation. Uranium stock did very well. They've pulled back somewhat. So in this way, what I'll be doing in my show tomorrow, the Tiger Technicians Hour at 10 o'clock, I'll be showing that there are certain sectors that are just bumping up against resistance, but there's a chance that other sectors might take up the slack so that we don't get some kind of major sell-off if there is. And not only that, if you're going to get sell-off, you've got to have bad news. So far, we haven't got any bad news that has to filter through the market. It hasn't done it. Basil Chapman signing off for now.